Did you know that SoFi stock has actually been listed on public markets since Q2 of 2021? And looking back to as far back data as we possibly can, which is roughly about a year before they actually went public, because that's how they show their year-over-year numbers, we can see so much data on how they've grown since Q2 of 2020 all the way to Q4 of 2022, the most recent filing. So let's go ahead and jump in and look at all these numbers, including so many other things that I wanted to cover in today's video. So first, starting with their members and their main product divisions, we can first see that back in Q2 of 2020, or 2.5 years ago since our most recent filing, we saw 1.2 million members. Now we're actually seeing more than 5.2 million members, which is an increase of 4 million members in just this small period of time, or a more than quadrupling of over plus 333%. Products grew even faster than that, with over 1.6 million products up to almost 7.9 million products, okay? And almost quintupling of these numbers, and actually growing faster than our overall members, which leads us into our next category here, which is the number of products per user. Back in Q2 of 2020, this was only 1.36 per member. Now it's up to 1.5 products per user, which just increases our overall amount of, monetization per user. Now looking into our three divisions, by far our largest in lending, about 70% of our overall business, you can see that we went from over 860,000 actual products to over 1.34 million, okay? A 55% increase, and this is by far the highest monetization product and where we make all of our money. And then that leads us on to our fastest growing division, financial services, that went from 780,000 products up to 6.5 million, okay? An 8x, 736% increase. And then obviously our tech platform, which went from almost 36 million users up to 130 million, okay? Still over a tripling, 263%. Now just really quickly into the diversification as well, where you can see that our lending products, technology, and financial services, the three that we're actually tracking, have absolutely changed dramatically over their different monetizations. Remember that these are actually in the white columns. But in the blue columns here, we have the revenue per products, or revenue per accounts in terms of their technology platform, where you can see the differences in how they actually scaled over time, where our lending platform has just absolutely exploded in monetization. Same thing really for our our financial services. Ever since we actually got the bank charter, it's just been, climbing dramatically, and that's going to continue, especially with new products and these sorts of things. But our actual technology platform has seen its fair share of ups and downs in terms of its monetization. Absolutely crazy. The take rate back in Q1 of 2021, I don't know how it was this high, $1.28 per account, whenever you're talking about, 90 million different accounts, versus today where we're only taking about 78 cents per account. So very, very different. Obviously, though, we are still making much more revenue over time because, well, we're just scaling the accounts. This is only from Q1 of 2021 and not like Q2 of 2020 like we did have with the other statistics, but still, it's very important to see this type of, change in monetization. But now let's actually look at the individual products that make up for this diversification, where we can see back from Q2 of 2020, when everyone thought that we were a student loan provider, we still actually had more personal loans than we did student loans, which is, surprising to a lot of people. But still, student loans was a big portion of our business, and we really haven't grown it really at all. 26% is great, but it's still not what we were expecting over time, or the 76% growth like what we saw in personal loans, or 150% in home loans. That's just really because we started at such a low base. That's why we're seeing such a high percent. But that being said, our business today is mainly a personal loan business. And then moving on to the financial services products, we really have SoFi Money, Invest, Credit Card, and Relay, where you can see the growth has just been unbelievable. SoFi Money has had just an absolute explosion, right? This also has to do with us offering so many new cool products like direct deposit with really, really high interest rates that have, gotten a lot of great customers in there. SoFi Invest has added so many new things, options and margin accounts, automated investing, IPO access, all these different things. So the growth has just been explosive there as well. Credit cards. This is a really cool one. We have 171,000 credit cards out there. Back in Q2 of 2020, we didn't have a single one, right? So that's a new product for us. And then, Relay just started back then as well. And now obviously it's grown dramatically, okay? Almost or more than 8x at this point. And then just also to add on to that, SoFi at Work was a brand new product that has absolutely exploded since then, and referred loans was not even around. We're already at 41,000 new referred loans, and that's only been out for around 3 or 4 quarters at this point. This is something that's rarely talked about, but the increased monetization that SoFi is able to bring because they're actually delivering on new products is really important. For example, it doesn't really cost us anything, and we're probably already profitable on our credit card business, but yet whenever we're actually looking at the monetization of having 0 credit card users to having 171,000 new credit card members, that's a massive benefit to our business, and also allows us to have sort of a lending product under the financial services sector, which can really help monetization, because then we start to earn some of those high yields on a sort of lending product that really does also collect interchange fees and everything like this that we also gain to benefit. It's seeming to be that all of the new products that SoFi has been adding have been extremely high margin products. Now this also brings me to another part of getting direct deposit clients that actually increase monetization versus just a regular other person that might just be using a SoFi Money account to transfer money to their friends. The actual impact that a direct deposit user can have, because they might pay all their bills through there, they might use their debit or credit cards more often through the actual place where they have a direct deposit relationship with, and that can actually 10x the revenue per user whenever they get on direct deposit, which is super important for SoFi. This is why SoFi actually brags that 50% of the users that actually get onto SoFi Money in the first 30 days actually start using direct deposit. That actually lowers the cost of our lending business and makes it more profitable for us to actually do our other businesses, but the actual expense goes to SoFi Money. So even profitability of SoFi Money actually drives other divisions as well. But how are they doing whenever it comes to deposits? Well, that's a really important question as well. Actually, let me fully drop off my camera here so then you guys can get the full picture, okay? Being ranked from top to bottom in terms of market cap in these large companies, at the bottom you can see here SoFi. They're not very big, but they are making a massive impact whenever it comes to how fast they're taking away, all the deposits from these big banks. Whenever you look at the JP Morgans and Bank of America's, Wells Fargo's, they are actually bleeding deposits from Q1 to Q4, absolutely getting destroyed. Well, where is that money all going? Well, it's going into new neobanks and these online banks that people want to use. Even whenever I rank by the total gains on these deposits, SoFi actually ranks pretty high compared to, all of these large banks. The majority of the companies on this list are actually losing deposits. Knowing that SoFi is actually beating out on some of these companies with 150 million plus deposits total is just insane. We really are taking market share, and it's really exciting to see from a company with just a market cap of $6 billion. And even like last month, whenever it was in the $4 ranges, it was like $3.7 billion worth of a market cap. So, things have changed, but still, it's just hilarious to see how undervalued we are whenever our members are using us more than ever. But that could just be my opinion. Analysts or other investors might have their own opinions. But why don't we look at the opinion of a different investor? Why don't we look at the CEO of the actual stock, Anthony Nodo, okay? And his own purchases in the company, as you can see over the last couple months, but most importantly in December, where he was purchasing this stock in the $4 ranges and buying millions of dollars every single day. And just to make it clear, those are all cash purchases that he made with his own money. Those are not stock options. That level of conviction from a CEO who also does have stock options, which means he's going to benefit from this company's success regardless, doubling down on that investment is a really positive sign for investors to see, and actually statistically proven that it's most likely to outperform the markets. I also wanted to show off a couple graphs from both Christopher Hager and Stephen Fiorillo, who are Seeking Alpha analysts that actually follow SoFi stock very closely. The two people that I'm covering, I cover a lot, and they are very good friends of the channel. But that being said, they're not the only amazing analysts that actually cover SoFi on Seeking Alpha, so make sure you guys check out the best deal that you could possibly get on Seeking Alpha down in the description down below, and you can check out all sorts of data just like this. But looking at this first chart that Stephen Fiorillo had put out about the actual origination volumes of our lending products that have actually crossed between 2020 all the way up to 2022, whether that's through student loans, personal loans, or home loans, the actual differentiation in our business has changed dramatically. Now, both originations in student loans and home loans have practically dropped off the map, but personal loans has picked up all of the slack, leaving for our originations to continue to climb year year after year after year, and it just shows the adaptability of SoFi whenever we go through really harsh times, that we're able to pivot our business model and actually still outperform. And that's what I really love about SoFi, is that these latest quarters have really shown that whatever bear case you actually throw at SoFi, we're able to deflect and actually prove that our business model is getting better in every aspect. Like as you can see from this tweet here from Christopher Hager, where he says that SBC, or stock-based compensation, has been dropping, which was a massive bear case for SoFi, is that we were absolutely way overpaying executives and staff, and that it wasn't sustainable. We were actually holding some of the highest SBC across the board in fintech at over 27% of our overall revenue. Well, that is actually continuing to drop, as you can see. The actual article, let me switch over to full recording here, and where you can actually see that our revenue has been climbing totally, that both in absolute terms, you can see in the orange bar there that SBC is actually dropping, and in terms of relative terms, that green line where we're actually, it's actually less of our total revenue, down to 16% today, and by next year expected to go all the way down to sub 10% levels. New products and innovations have always been the key to SoFi's growth, and that will continue to happen going forward. We can see so many highly recommended products for SoFi in 2023, things like retail certificate of deposits, or even level 1 options. Premium or alternative credit cards are also being rumored to be on the table this year, as well as the potential for small to medium-sized business accounts and/or loans. In terms of key new products for the technology platform this year, Bender9000, an amazing researcher in the community, has found this. He believes that Galileo will be able to offer rewards, new credit card programs, lantern-style referrals, and even loans out to multiple different businesses such as Robinhood or Chime. All of these reasons combined is sort of why I'm investing in SoFi. High growth rates, amazingly high total addressable market, the bear cases are slowly being dismantled, and the future of innovation is looking bright. I'd love to read a quote out to you from the amazing Stephen Fiorillo. "I think SoFi has the largest potential for capital appreciation out of all the equities that I'm invested in over the next 5 to 10 years. We have yet to see all of SoFi's businesses operate in unison, and all of the quarterly beats have come through adversity and had to overcome major external obstacles. The question becomes, what will SoFi accomplish in 2023 and 2024 when synergies between Galileo and Technisys are recognized, student loan originations are back to normal, and the Fed funds rates are normal, which will make purchasing homes more attractive? I continue to acquire shares, and I believe SoFi can become a top financial institution this decade. Unless something drastic changes, I believe Mr. Nodo will deliver large amounts of capital appreciation for long-term investors, and shares are inexpensive relative to what the future earnings power will be."